Good afternoon. Welcome to the weekly livestock market update. I'm Brownfield reporter Megan Grebner. Happy Friday before Labor Day, the unofficial in December, into summer. With us this afternoon to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Plenty for us to talk about this week. We're going to talk a little consumer side of things. We're going to talk about the big U.S. trade outlook picture. We'll talk jobs. We're going to talk a little bit about export sales reports too, because that's something that's been talked about a lot the last week or so. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, live fed steers were down about $1.70. Those feeder cattle auctions were steady to $3 lower this week. On the future side, the October live cattle futures contract was up about $1.70, and the October feeder cattle contract was up nearly $1.80. We lost on the choice box beef price this week. It was down $3.45. Lower loins and ribs really led the way on the beef side of the equation. Hogs this week, cash hogs were down $5.50. The October lean hog futures contract was also down about 85 cents this week. Pork cutout value also lost about $3.75. Lower loins and lower bellies really led the way there.
It's really kind of just been a fairly sluggish week for the most part. When you take a look at both cash and future side of things, is that kind of leading up into the holiday, or like I think specifically on the cash hog side of things, have we just gone up for so long? It's time to take a step back.
Yeah, so we've certainly been on a ride on the hog side, positive ride on the hog side. So a little, retrenchment as we think about whether or not we're starting to maybe see some signs of expansion. I think that has folks perhaps, a little more wondering where prices go. So it has been a good ride. I will say, though, when you think about these wholesale prices, the pork cutout value is a little more than $6 below where it was a year ago at this time. But maybe more importantly, the choice box beef price is nearly 80 cents below where it was a year ago at this time. So we're seeing those wholesale prices that are much lower. I hope that doesn't spell, continued weakness as we look ahead.
Let's talk slaughter numbers as we take a look at things this week. Again, I think really interesting looking at what happened in terms of hog slaughter numbers as well.
Yes, I don't know if we're getting a little pre-holiday activity going on here, but USDA says a run of 638,000 head of cattle for the week ending September 3rd. That's 40,000 head below a week ago, 17,000 head above a year ago. On the hog side, a run of 2.35 million head of hogs this week. That's down 55,000 head relative to a week ago, and down 35,000 head relative to where we were a year ago.
When we look year over year, how are we sitting on both the cattle and hog side of things?
Yeah, so if you look on the cattle side, 1.3% above year to date in terms of cattle slaughter. We actually are pushing up a little bit there. And on the hog side, down 3.4% for the year on hog slaughter.
And starting to maybe even narrow that year over year number, especially compared to where we started the year off.
That's right. We certainly started 2022 with much lower hog slaughter, and we've continued to move closer to where we were a year ago as we've gone through the year. But we'll finish down. It's just we'll continue to get closer to year ago levels.
All right, let's talk restaurant performance index as we take a look at this consumer side of things. How is that number shaping up as we continue to see some of those challenges and inflationary challenges and pressure as well?
Yeah, so we'll start with the positive piece of this. So expectations were actually higher in July of 2022 relative to June, up just slightly. So perhaps we're building some longer term positives there. Yet when you look at the current situation index, it was down for July relative to June. That leads to the overall index being down 0.5% in July relative to where we were in June. For me, the things that stick out in this report is both customer traffic and same store sales were below where we were the previous month. It's the first time in about 17 months that we didn't see higher same store sales compared to a year ago. So maybe not the most positive news we got out of that July restaurant performance index. Again, I think we're seeing the signs of what inflation, higher gasoline prices, et cetera, have meant when you think about that restaurant performance index.
I know we talk about gasoline prices in general and talking about that like extra part of everybody's budget. I know we're still well above where we were a year ago and even 2 years ago in terms of gas prices, but they have started to come back down. It'll be interesting to see how those numbers kind of come into play next month as well.
Yeah, that point is very good because we're talking about July numbers here. We know most of the gasoline declines we've seen have occurred post the month of July. So I expect maybe some more positive when we see next month's data.
All right, let's talk U.S. trade outlook as we look ahead for FY 2023. What are some of the numbers and what are we expecting?
Yeah, so USDA actually tells us for FY23, we're going to be down about $2.5 billion in terms of the value of exports. Looking at the data I have in front of me here, that's the first decline since 2020. So we're down slightly in 2020, but prior to that, we were up every year since 2016, except for 2020. So kind of breaking that trend of much higher. You look particularly at things that you and I like to talk about in terms of livestock components. It's really beef and veal that shows the biggest decline. So down $1.1 billion is the current FY23 projection. So remember, that's October 1st of 2022 through September 30th of 2023. And I will say FY22 was very strong because of just some of the strong export demand for beef and veal going to China.
When we look at that long term, is that something, I mean, we talk about less supplies, right? So if we're not exporting as much, how does that kind of play out to our outlook and play into our outlook for the upcoming year?
Yeah, so you ask a really good question, and this is an interesting part for me as you think about, so we're talking value in terms of what USDA is projecting. And yeah, you and I talk about much higher cattle prices. So if we're going to be down in value, we must be off, or USDA projecting us to be off pretty hard on quantity. I'll wait and see whether that's true. So I guess I'm a little surprised with the decline when we know we likely see higher cattle prices during FY23, given how short we're going to be in terms of beef production as we get through 2023.
Let's talk U.S. farm income. USDA also released that this week. As we take a look at that for 2022, where are we setting?
So good. So according to USDA, very good year for 2022. A record net farm income of $147.7 billion, Megan. That's despite the fact that we saw production expenses in this report up $66.2 billion as we talk about higher fuel, higher energy, higher fertilizer prices. In terms of livestock receipts, USDA is projecting $251.1 billion of livestock receipts. That's more than 28% above where we were in 2021. And that is likely a record in terms of livestock receipts that we're going to see as well. Cattle up 11.7, kind of leading the way. Dairy much higher, up 15.2. Chickens up 17.8. So we're seeing a lot of strength across the board in those livestock receipts. Yes, we're facing higher feed costs, but pretty amazing. And I will remind everyone that USDA did revise up significantly the 2021 farm income level. They're now projecting that or estimating 2021 at $140.4 billion, much higher than where they were prior to this release.
It definitely is interesting knowing what the projections are and knowing as we're thinking about input prices going up as well.
Yes, and I will remind everyone, so these are U.S. farm income estimates. I don't think, they're representative of anyone in particular. So I think there are parts of the country that are not nearly as financially sound as these averages suggest, and other places where it's been really good.
All right, let's talk jobs. We talked a little bit about restaurant performance index. I think talking jobs is probably also a good thing to talk about this week as we take a look. 315,000 jobs in August added. How does that line up to pre-report expectations?
Yeah, so we certainly came in very close to pre-report expectations. So, still growing in terms of jobs. It's interesting. We actually ticked the unemployment rate up to 3.7%. So I think we've had a few more folks that have, jumped in the job hunting game again. But 315,000 pales in comparison to that July number that we got last month, Megan. So they did revise that July number slightly, but 526,000 jobs was the revised number for July. So we've come down significantly from that, but still, it's again a very good jobs report. And if you look at the cost or the wages, 5.2% higher wages over the past 12 months. It's helping offset some of the inflation that we're seeing, at least not all of it, but some of it.
My next question was going to be, as we look at at the jobs, are we also seeing some improvement in wages? And I think, does that help when we're looking at the consumer demand side of things, knowing that wages are going up a little bit, maybe not as much as other things are rising, but does it help keep demand strong on the consumer side of things?
Yeah, so I appreciate that now everyone knows I'm a mind reader, since I got the question beforehand. But to the question, so yes, I think it helps. I don't want to say it offsets what we're seeing on the inflation side, but it does help many consumers. So this is going to all be about, not all consumers are probably faring as well in that wage increase over the last 12 months. I will continue to voice, concern about the lowest income earners and the impacts to them of inflation relative to what they're earning. Probably doesn't have quite the same offset as we're seeing in the middle and upper income brackets, for sure.
As we wrap up today, not necessarily a report, but we're going to talk about one of those reports. So it would have been last week's weekly export sales, kind of a snafu as the USDA Foreign Ag Service went to unveil some new reporting technology. They ended up recalling the report and then suspending temporarily those Thursday weekly export sales reports. So we didn't have one yesterday. We won't have one, which would be next Friday because of the holiday on Monday. And they've rolled it back to the legacy system. So I want to talk a little bit about what this means in terms of trading, and what does this mean in terms of economics and concerns, because we use that data so much for what we do in analysis and conversation and markets just in general.
Yeah, so I always say I love data, and more is preferred to less, although some listening to you and I might disagree with that statement. But we're missing some potential valuable information that markets won't be able to trade on until mid-September. And we certainly do rely a lot on that weekly export data to give us some direction of not just livestock, but where all these ag markets are going. So we're going to be without that. I guess I remind folks we want to be really careful as soon as that first weekly report starts to come back. You don't want to get caught if you're thinking about making any kind of selling or purchasing decisions. That in what could be, there's somehow a surprise that gets filled in after that data is released, positively or negatively. You want to make sure you're thinking carefully about those few days once we get the report back online. It's not the first time we've been without data. Don't forget the government was shut down for a period of time, and we had no data, and markets really struggled in that period of time. Yes, we're missing weekly export sales. We need that information. I just hope we get that back online quickly and efficiently. We don't need to be missing that for a period of time. You and I will talk about monthly trade data, which is well in arrears relative to that weekly data as it comes out next week. But if we go several weeks without any weekly data, we won't also probably be able to see the monthly trade data as well.
Does it cause some trepidation a little bit once they start to come back online then to be able to find direction and find some solid footing in that assumption or speculation of sales for what's happening?
So I think the answer is it depends. It depends on exactly what data we get back out once we see, that first weekly sales data. And I would be most concerned that if somehow there's surprises that we didn't anticipate. I will say, more generally, this is to the, I think there's more suspicion of data we collect today than there's been for a while. There's more producers in particular who will, question whether the USDA data is helpful to them. When you have these kinds of issues crop up, I always worry that just adds, fuel to the fire, if you will, of I'm going to not fill out my survey. And I will just continue to make the case that more public data provides more information for us to trade on than less. And if we have no public data, there are groups and companies that probably have other ways to generate estimates of what's going on better than us as individual producers out here. And you don't want to be at a disadvantage. And so let's not run away from, we still need good data and we need good public data available to us.
Scott, that'll do it for us this week as we look ahead to next week.
It is much shorter, so we get monthly trade data on Thursday, and that's it for next week.
I about muted myself for no reason. I have no idea why. That will give us plenty of time to talk about other things, I suppose. And if you have questions, feel free to submit those. Go to brownfieldagnews.com. You can also subscribe to our weekly livestock market update newsletter, which comes out on Saturday mornings. Or if you have questions and comments, concerns, you can submit those as well. To check out the commodity market side of things, if you're curious, check out the weekly commodity market update with Ben Brown and Brownfield's Will Robinson. That's on Tuesdays. Have a great long weekend. Happy unofficial end to summer with Scott Brown. I'm Megan Grebner for Brownfield.